Alrighty guys, what is going up? Welcome back to the best investing money management channel on YouTube. Now in today's video, I want to talk about AMC, why this stock could virtually explode in value. So for those of you that don't know what AMC is a movie theater company that over the past couple of years, if we actually look at the 3-year chart, you can see that this stock over the past 3 years has been selling off, really has been cutting dividends, missed earnings, and then we had this huge amount of buying pressure and all of these massive short squeezes causing this stock to virtually go parabolic, making a ton of people a lot of money off this. And yes, I do think AMC carries a ton of short-term potential over the next, over the next year, maybe 2 years. This stock could explode up even more, right? We saw GameStop, GME do this move where it went from $11 all the way up to almost $500 and then sell off and really just start consolidating out. This one here too could explode, but I think we had this massive move and it's going to be a little harder for this thing to kind of come up. But if we actually look at AMC, we had that great move as well. But one thing that I did notice is it's forming a wedge. Now, a wedge is a technical pattern that millions upon millions of traders, hedge funds use to overall get a good understanding of where the stock is going. So if we actually draw out the resistance, you can see the wedge very, very easy. So you can see this is the resistance, okay? You can see every time it hits this trend line, we just have this tendency to get sell off. So it hits it, sold off, hits it, sold off, hits it, sold off, hits it, sold off. So it virtually just has a very, very hard time breaking above it. Now, if we actually draw out support's very similar. If we actually draw it out like this. So you can see either way we draw it out, it's creating this wedge. It's creating this pattern that when the stock is trading in between it, if we have a break of 47 right here, this previous resistance, this stock virtually could start moving its way back up to some highs and create a technical squeeze, a resistant breakout. And then when that happens, this is when we're going to have a tendency to see these short squeezes, very similar to the stock down in here. It created a little wedge, causing a move to go up. Now, not to mention, guys, yes, this is going to be a 100% high speculation. This is going to be more of a risky investment because a stock could have that tendency to start selling off and using it on the downside. It's one of these plays where if it breaks above resistance, it's going to be going up, and if it breaks below support, it could start selling off. So me personally, I think there's a lot of short-term potential, but any long-term potential, anytime you hold a stock for five plus years, you always have to understand, okay, if I have money in AMC, where am I missing? Where's my opportunity cost? So if I have $1,000 in AMC, what if I put that $1,000 into the S&P 500? Yes, I know the S&P 500 is more of a riskier or more of a conservative play, but you're going to be getting that annual return that could be higher than the volatility of AMC. So for a long-term investment, the S&P 500 could be a higher play. But for a short-term play or a swing trade, AMC could be a possible move. So yes, I'm going to be buying a little bit. I'm going to be buying about 2% of my portfolio. So what that means is for every $100 I have invested into blue chip stocks, growth stocks, the S&P 500, Apple, Amazon, all my rest of my portfolio, I'm going to be putting $2 into Amazon or AMC. And you might be saying, well, Carter, that's not much. But here's the thing. If I'm wrong and this stock sells off, I'm only out 2% of my portfolio. So at the end of the day, it's not much. And my other assets or my other stocks are going to outweigh the loss of AMC. But if I'm right, that 2% is going to definitely double, triple, and it's going to be a fantastic and fun investment to see where this thing starts going up. So I definitely think there's pros and cons to each side. And yeah, if you're looking on the fundamental side, AMC has done a great job of actually reducing some debt. It's just one thing that does concern me on the fundamental side is the revenue. So fundamentals, more of a long-term play. So for me, Short term, definitely understand the risk because it's extremely, extremely volatile, but it's going to be a fun one to kind of hop on, use it with caution, understand the risk, and try to make some money off it. So that's kind of my mindset with it. I hope you guys enjoyed it. If you did, hit that like button, subscribe to the channel, and we will see you guys later. Remember to stay happy, stay positive, and stay safe. Take care.